Okay, we are officially live. Here we go, guys. Give me 1 second. Hold up. We are officially here. Woo! It's Friday, TGIF, December 9th, 2022. We're here. We got through the week. It's been a week. I hope everyone has had a good week. Let me tweet out that I am live doing the market open. Here we go, man. It's December 9th. We have some new Palantir deals. Another one. We've got the producer price index to talk about. And then we've got the market that is declining off of this producer price index, basically going way too high and being not good, which might signal what's going to happen for the CPI. Also, I slept on the wrong side and my neck is in pain, like a lot of pain. I'm trying not to show it, but my neck is in pain. All right, let me put this in the chat Discord. Hope everyone is having a good day and ending out to have a good week. And also, let me know what your weekend plans are. Richard, David, Tim, DeYoung. I've been really enjoying starting the day with the stream. Good work. Thank you, Tim. I appreciate you being here. 5-star Breezy. David, Mike sounds weird. Oh, hold on. I might have a fix. Yep. Here's why it sounds weird. Boom. Mike should sound. Thank you for letting me know that. Who said that? Who said Mike said? Seth. Because last time I went like 8 minutes with the crappy mic and no one said anything. And I remember me, Kevin, once he did it, and there was no audio at all, and he was just talking. He was just explaining. He was talking, doing analysis, and there was literally no mic, and it was hilarious. And then he realized, oh crap, no one's listening. There we are. Dex, what's up? Futbucker, what's up? Alfred, what's up? Crisis 24 deal. Yes. All right, here we go. We've got a new deal by Palantir. I'll make another video about this later today, going more in depth. But let's look at a basic one of it. I'm off work for the rest of the year, brother. Oh shoot, Nicola, that's awesome. That is legit, bro. You get to have the rest of the year off. I expect full 100% watch time on every video I put out now that you are off for the rest of the year. I'm just kidding, but that's awesome. Palantir and Crisis 24, a Garda World company, announced a new partnership to revolutionize security and risk management for the 21st century. Okay, let's read this a little bit. Integrated risk management firm Crisis 24, a Garda World company to transform security and risk management with AI. This multi-million-dollar long-term strategic partnership will help to reshape security and risk management by leveraging critical information to provide clients with innovative solutions, data-driven insights for results-oriented decision-making that meet their everyday challenges. In a dynamic and interconnected world, effective risk mitigation relies on being able to bring together and comprehend data about global events. Leveraging Crisis 24's unparalleled expertise and depth of knowledge in crisis management and intelligence, Palantir's Foundry operating system will enable users to identify critical trends and provide comprehensive analysis of emerging risks. So risk management is a sector of society that pretty much every company has to use, particularly financial institutions. And the reason for that is because if you're a bank and you're working in Citibank and someone's laundering money all across, I think like a couple of months ago, someone used my credit card to buy a laptop in Minnesota. And I was like, what? Like, how's this happening? So, like, the bank immediately saw that trend in the data. They're like, Amit doesn't live in Minnesota, so this is really weird. And then they were able to, like, stop that from happening. So it 1000% makes sense that Palantir would be used and deployed Foundry in a particular type of way to help when it comes out with crisis mitigation and risk management. Let's go to Crisis 24's website because I haven't seen these guys before. So here's their website. First of all, where are they located? They are, I think they're an American company, but they might not be. Obviously, they have a global kind of clients. They've been around since 1990, trusted by some pretty elite firms. Security services. Garda World counts over 122,000 highly qualified and experienced professionals dedicated to protecting business. So it's a very big company. Okay, wow. This is a very big company. Look at this. They're in Paris. They're in London. They're in Germany. They're in Florida. They're in Dubai. They're in South Africa, New York, Singapore. Bro, that's so cool to have like a company that has offices in like the biggest. Like if my startup ever gets big, bro, I would love to have like a Singapore office, a Paris office. Like, oh, I'm going to the London office today. And from the London office, then I'll go to the Dubai office.
And then I'm going to the New York office. That's so cool. And then I'm going to get dinner in the south of France. That's like so dope, bro. Okay, so yeah, I mean, it seems like a pretty big freaking company. I want to know if there's any information on their revenues or anything like that. Crisis 24. Oh, 2000. They were born in 2000. Let's go to their Twitter. Let's see what their Twitter says. Crisis 24 is your trusted single source for global security information. Yeah, so they're a risk management firm. I'll dive deeper into the PR a little bit later in another video and try to get a little bit of understanding. One thing is Karp said, every organization must be able to understand, anticipate, and react effectively to risks as they evolve. This requires leveraging the massive amount of relevant data they have and distilling it into usable insights. And we are proud to partner with industry leader Crisis 24 and parent company Garda World onto this challenge. Crisis 24 CEO says we are privileged to partner with Palantir, a world-renowned software and AI powerhouse and strategic growth ally to maximize Crisis 24's full-service integrated risk solutions. This is good, man. This is the third deal they're getting this week. The first was the CDC deal, 5 years, $443 million. Then they got the Tampa Bay Hospital deal. They got Cleveland Clinic last week. They got Lockheed Martin last week. So there's actually the fifth deal now by getting Crisis 24, a third deal this week. So not too bad. Mitt will turn British upon... Bro, I was listening to a little bit of that Prince Harry and what's her name, Meghan Markle documentary yesterday before I went to sleep, and the accent, bro, that British accent is fucking sexy. Like, it is, like, if you got a British accent, man. Hello, I just came from the corner store and I just got a sandwich. Like, it's just like, bro, looking in America, I just got a sandwich versus I just got a sandwich. Like, come on, bro. You can't tell me one of them is not sexier than the other. It's just math. Gross. All right, some of you say gross. Morning. What? Another contract this week. There we go. Where do you get such quick news on Palantir's contracts? It's very simple, actually. I just go to this website called Twitter, which if you are not following me on Twitter, you need to be following me on Twitter. That is my one ask. Follow me on Twitter. @AmitIsInvesting. If you don't have a Twitter, make a Twitter. Check it out. Follow me. You'll enjoy the commentary throughout the day. It's a part of the community. There's a very big Palantir community on Twitter. CodeStrap, I know you guys know him. He recently just joined Twitter. So he's on there as well. So I would check it out. Dancing. It's Friday. Markets a tanking. Yeah, so we'll talk about the producer price index. Apparently, the PPI came in hotter than expected, which means the producer price index is the index that measures how much producers are willing to pay for prices, right? So like if I'm a manufacturer of bread and it costs me more to make bread, or even the bread around the packaging of the bread, Palantir down 0.56%, then that means the consumer is inevitably going to have to pay more for the bread because I have to pay more to buy the bread or to package the bread. So that's like if the PPI is up 0.3% month over month, up 37% year over year, it's supposed to be going down for CPI to also reflect it going down. So it's not a good thing. It's not the worst thing in the world. I mean, we'll see how the CPI acts next Tuesday, but it's not a good thing. Let's just say that. So we'll talk about that in a little bit as we open up the market, and we'll keep going from there. S&P down just a little bit. Amit, you on tonight and CodeStrap going to be on next week. I'll confirm with him. I haven't confirmed. I'll ask him. It'd be awesome if he's on. I'll definitely be on this week, but we'll see if he's on. Miyoko, hello. Rachi Baku breaks all the Palantir contracts on Twitter. Yes, follow them right here. Rachi Baku. They're from Japan and absolutely amazing. Good morning, Goal. Good morning, Marco. Thank you for being here. Nathaniel, what's up? When you tell an English person that they have an English accent, they will go ballistic and reply, there is no English accent. It's English language. It's an English accent, fam. It's an English accent. Okay, here we go. Friday, 12/9/2022. By the way, you know I said my mom was sick yesterday? Guess what? She got COVID. I took her to the hospital yesterday. They did a test. She has COVID. So she has COVID. I hope I don't get it. We'll see. I live with her, so I might get it, but hopefully not. It is December 9th, 2022, 9:30 a.m. The stock market is now open. Wake your ass up. The stock market is now open. Let's get into it. S&P down 0.32 or 0.23%. SOSX, which is triple leveraged ETF on semiconductors that is short semiconductors. So semiconductors go down. This guy goes up. It's up 1.3%. Carvana actually down 6%, but up a little bit from its lows of yesterday. If you shorted at 3.5, you're down on your short because now it's up at 4.6. Carvana at one point was trading at $300 something, and they were doing like they were selling 10,000 cars for $20,000. It was like some ridiculous type of thing. They are a prime example of things that got pumped up in a bad market. Snapchat 5 cents away from falling below $8. My price target is 7. I like to see Snapchat at 7 for a nice little swing trade back to 10 for a 30% gain, but we'll see if it gets there. Meta at 114.84%. Meta, I'm looking at 105. Let's see if we can get it back down there. Apple 141 up from 130. Microsoft 245. Google 93. We got to lows of Google at about 83. Those were our lows on Google. So let's see if we can get Google even lower than that. Rocket Lab 39, Black Sky 210, CRM 128. CRM falling pretty precipitously this week. This week it was, what do we have? This week we had highs about 143 just on December 7th, like 2 days ago. So if we do some math, 143 divided by 128 is 12%, basically 11.7. So we have a 12% decline in the past couple of days. UiPath, the only stock that is in all 6 of ARC ETFs, 1277. Robin at 936. Taiwan Semiconductors and that Apple deal that came out this week was pretty awesome with Apple. I believe Taiwan investing like $40 billion in Apple, partnering with them for that investment as well. Enphase 313, Netflix 322. Nothing too crazy as the market is open, but obviously still red, not super green. Amid, have you sold out a Tesla? Paper hands? Nope. I still have all my Tesla average at 220, waiting to obviously average down. What is Tesla right now? Let's see. Forgot about Tesla. 175. Okay, so it's green. 166 was the low. I think got to like 169 yesterday, so we will see how it goes. 7 cents, a 42% gain. Oh, that's right. My math was off on that. Why did I think it was 30%? Yeah, you're right. It's a 42% gain. Wake up, your ass Amit is online. Yes, sir. Spent all yesterday grinding a 35-page accounting report on Netflix. I made sure to mention it's not about... Wait, Arnold, why did you spend all day grinding this accounting report on Netflix? Do you work at a bank and like have to do research reports, or are you doing this for fun? Because I love investing, but I don't know if I'm spending 35 pages on an accounting report on Netflix. Or are you in college and you had to do it for an assignment? I'm very curious about that. That's interesting. Amit, next Tuesday morning is one of the most important days on the market. Are you going to do a live stream for the CPI? I know it's early, bro, but you're supposed to be an entrepreneur. Yeah, I mean, look, whenever the CPI comes out, I don't literally do it as soon as it comes out. I kind of just do it afterwards because it's not that serious that you need to do it. Because I want to open the market, and the CPI comes out an hour before the market opens. So then you're just kind of, we'll see. I'm up early regardless. It's not like I can't do it. I'm up. I'm just up doing other stuff that I really need to get done. I try to get as much stuff as I can done before the market open, but we'll see. Okay, Snowflake at 144, Home Depot 322, Walmart 146, Bitcoin for some reason it's doing decently well. It was stuck in the 16s. Now it's up right up there in the 7. If you bought it at 15.5 at the low, you're up a decent amount at 17,000. Yeah, so nothing crazy today. Stocks aren't going crazy. It's a little bit red, but nothing crazy red. A little bit green on certain holdings. But outside of that, it's a relatively regular Friday. Nothing too crazy. PPA come today. Okay, so let's go to the PPI article. Let me pull that up. By the way, the FTC has sued to block this Activision deal with Microsoft. I was confused why they're doing it. I mean, like, at some level, there are probably Activision shareholders that just want to get their money and like not compete with Microsoft and Unity and EA. And I don't know. I don't know if it's the best thing for them to be able to do that, but it's likely not getting done. Once the FTC sues you, it's going to be hard. Wholesale prices rose 0.3% in November, more than expected, despite hopes that inflation is cooling. The producer index, a measure of what companies get their products in the pipeline, increased 0.3%. And 7.4% from a year ago. A 38% surge in wholesale vegetable prices helped push up the food index by 3.3%, offsetting an identical 3.3% decline in energy. So the decline in energy costs is real. I don't know if you guys noticed it, at least in the United States. Oil is going down. Like gas is going down pretty dramatic. I mean, gas was at like 330, 329 the other day. I was like, what? 329? That's like stuff from 2021. So the decline in energy was just offset by the increase in vegetable prices. And the CPI next week is going to let us know a lot. Okay, excluding food and energy, core PPI was 0.4%, also against a 0.2% estimate. It was up 6.2% from a year ago compared to 6.6. Core is where you exclude food and energy. Stocks fell following this. The hot inflation data keeps the Federal Reserve on track for another interest rate increase next week, likely 0.5% hike that would push benchmark borrowing rates to a target range of 4.25 to 4.5%. That is where interest rates will be from 0 a year ago, which is just insane. I mean, that's why our economy has fundamentally changed. On the good side, the index rose just 0.1%, steep decline from 0.6% October gain. The modest gain came from a 38.1% acceleration in prices for fresh and dry vegetables. I want to know why that happened. They're not explaining why that happened. Like, was there a certain drought in some place where was farmland in concern? Was there geopolitical reasons for why? Did Ukraine have anything to do with it? 38.1% acceleration in prices. You know, it's interesting. Like, if you go to get a Red Bull, it used to be like $2.50 everywhere. Now some places, or it's $2.29. Some places it's $2.69. Some places it's $2.70. Some places it's $3. Definitely different places work with different prices, but on the whole, a lot of places are getting more expensive. That is definitely sure. Activision so overvalued. Yeah, one could argue that Microsoft is happy that this deal got sued because $69 billion in this economy is probably not worth it, man. You're looking at more so something like, I don't know, 50 billion. Like, you don't need to pay that much money. That's a lot of money. So let's see. Let's actually look at a little bit of what they're saying about Microsoft, and then we'll go into some Tesla stuff, and keep it going from there. Maybe Microsoft has a chance to get through this, but we will see. Okay, well, let's click this one.
Federal Trade Commission suing to block Microsoft's acquisition of Activision Blizzard, but Microsoft is not expected to go away quietly. Joining us right now is Aaron Glick, Cowen Deals analyst. And Aaron, this is one that it looks like they are girding for a fight. They're not going to step away. What happens?
It's a great question. The prevailing wisdom amongst investors and arbitrage investors is that Microsoft has the upper hand with in a legal battle against the FTC because of the 10-year licensing agreement that they've offered to Nintendo, Switch, and PlayStation. But what's important here, and I just read through the complaint this morning, what's important to note is that this is not just about the FTC. I mean, this is also about the UK CMA, that's their antitrust authority, and the European Commission, that's the European Union's antitrust authority. Because those two jurisdictions, if they bring a lawsuit to block this deal, it's much more difficult for Microsoft to challenge them in those jurisdictions and overcome that lawsuit. And so I'd like to just highlight one thing in the complaint and this was in the complaint, it was also the second paragraph of the FTC's press release announcing the lawsuit. They highlighted that when Microsoft acquired Bethesda Games in early 2021, they made representations to the European Commission that they would have no incentive to foreclose those games from rival consoles, meaning that economically it was in their best interest to continue to offer those games to people like PlayStation. That was early 2021, and already they've decided to make those games exclusive to Microsoft, to Xbox.
That's the FTC's case. I didn't even know that. So certain games that were supposed to be licensed that Activision created to all producers, if they go exclusive to Microsoft, people are going to leave their PlayStation, right? If they really want the game, which is the entire point of the letter. It's like music for a record label. Like if Taylor Swift is only on Spotify, buy Apple, buy Amazon, I'm going to Spotify, right? Like I have to if I like that music. So that is definitely an argument the FTC can put on Microsoft.
To the Microsoft ecosystem. And so I think that tarnishes the trust that the EC has. And when the EC unconditionally cleared Microsoft's acquisition of Bethesda, they highlighted that Microsoft made representations that they wouldn't have any incentive economically to withhold games. And so that was right front and center in the FTC complaint. So
is that
this is
something
not
that the European Union has kind of weighed in on? It's one thing for the FTC to be pointing this out. It's another thing if European regulators say, yeah, you lied to us.
That's exactly what I'm trying to get at here. So the UK and the EC, their reviews are still pending. We're going to see, we expect to see a statement of objections from the UK sometime in January. We might see one from the European Commission a little later. Those reviews are set to expire at the end of the first quarter, right? So the FTC and Lena Khan, they've taken the lead here. and they're signaling to these other regulators, look, here's some potential issues. And we don't know. We know that they all communicate with each other. We don't know that if they're on the same page or not. But that's a risk factor that investors are going to be talking about.
Your best guess as to the EU, because I thought you were in a position where you thought EU regulators were more likely to approve this.
I think the consensus view amongst arbitrage investors is that the 10-year licensing agreement will carry the day and help them secure approval in the UK and in the EC. Look, I think we run a little bit of risk of being in groupthink right now, in what people call the ARB echo chamber. We're all talking to the same consultants. We're all looking at the same precedents, and so everyone has the same thesis. I think there could be more risk here than the market's crediting. Now, with that said, let's remember that the market's only pricing about a 30-35% probability of this deal closing. So I think the pushback to what I'm saying, and I'm sure I'm going to hear it from a lot of clients, I think the pushback is we're being compensated for that risk, right? I think most investors would say there's at least a 50-50 chance that they prevail in these jurisdictions. I personally might be a little lower. It's very difficult to say. But
okay, let's actually go to that stock right now. Yeah, if I was Microsoft, I kind of even wouldn't want to do this deal. I mean, yeah, you get a lot of assets, which is great, but why would you pay $69 billion, right? Like it's just too much money for this thing. It's just way too much. Like they have a market cap of $58 billion right now. You're paying $69 billion, so you're paying $11 billion premium. You never, if 2023 is that bad, like this bad boy could go right down to, what was its low this year? What was the low? It was 56 on December 2021. Then it ran up to 86. And since then, the lowest it's got to 70. The highest it got was 80. Yeah, I mean, there's a world where it just drops back down into the 60s, potentially even 50s. But I mean, trying to make your games exclusive, definitely. The FTC's got a case there, you know. I mean, like they have at least some argument. Karp has sold shares. For those that are wondering, he sold about 2.5 million shares. The reason is for tax purposes and for vesting. So when you have RSUs, restricted stock options, you need to cover the taxes in order to buy that stock. So if you're granted stock at like 0.1 cents, but you're granted millions of stock, you need to buy that stock, which ends up being millions of dollars. So you need to sell current stock that you have. So there's a difference between selling for profit and then selling for vesting. Karp has not sold since December 2021. He owns about 48 million shares, and now when he sold, it was mainly for taxes as well. Okay, let's take a look at a little bit of Tesla news and go from there. We have Tesla and Toyota comparisons. Here's a little bit more of a bearish argument, and let's hear about that. Why hasn't he bought more? I agree, Chris. I think he should have bought more. I agree. I'm not covering for that. I wish he bought more. I agree. Hopefully he does, but I wish he did.
Joining us right now is Craig Irwin, Roth Capital Senior Research Analyst. Good morning to you. We've been talking about Elon Musk and, well, frankly, we've been talking about Twitter all week, Craig, but there's a view that his involvement with Twitter may be having an impact on Tesla and the share price there. What do you think?
Yeah, no, I think you're dead on the money. You know, I've seen Tesla as egregiously overvalued for about the last year and a half. And, you know, its valuation, I believe, is driven by hype. Twitter is a hype machine. Musk is very clearly stepping away from Tesla to Twitter. He's got a lot of things to fix over at Twitter. And that is pulling the hype off Tesla. The idea that maybe he's named Tom Zhu as the successor, I don't know when he's going to take the reins, is also a fairly big negative for Tesla. So, you know, he's a very talented executive. Tesla's a very important company. It's transformed transportation for the world. But you know, we think people should ask, you know, really, what do we want to pay for this, and what's it going to look like in 5 years?
What do you think, Craig? What do you think fair value is for this company right now?
Shouldn't be worth more than Toyota. So I think something well below 100. My price target's 85.
Okay, we're going to get back to the video, but let me pull up Toyota real quick just to do the comparison between this. Obviously, this guy is not super bullish. Toyota has a market cap of 195 billion. So he wants Tesla to be worth not more than that. So that's 195 billion. Tesla at its height was worth $1 trillion, but right now it's trading at about 3 times more than that. A little bit less than about 2.5 times more than that at 564 billion. So that's where he wants Toyota or Tesla to be trading at when it comes to the comparison with Toyota. Down to $85.
Your price target is $85. We're $176 today. How much of that relates to his involvement in SpaceX and Twitter and other things? How much of that is just what you think this business unto itself is worth? If there was no Twitter and no SpaceX, would you say the same thing or no?
I would say the same. I would say exactly the same thing. I think, I've been saying that actually for a while. I'm pretty stubborn. I stick with my thesis for a long time, unless I get pushed off it pretty hard. I don't believe Tesla's worth more than a company like Toyota sells, almost an order of magnitude more vehicles than they do. There's nothing.
And you don't buy the argument that Tesla ultimately could turn out to be way more than a classic automobile company, insofar as it could turn into a robotaxi business, given the the self-driving features that they're creating. It could turn into a solar business. It could. I'm just the thesis around the stock price being as high as it is today. Ron Barron's been on our broadcast and others, would be that it really can't be considered an automobile company unto itself.
I think those are false arguments. So the self-driving capability is something that consumes power. If you're going to have level 4 with technology that's on the drawing board today, you're going to consume just as much power for the actual ADAS system itself as you would for the drivetrain. Think about cutting the miles you can drive in half. That's actually also fairly expensive to operate, and the technology is not there. It's not safe enough. They're having serious problems with optical apparitions causing fatal accidents. I don't see robotaxis anytime soon. There's a lot of other things people like to point to, software, etc. I don't think Toyota can't do that. There's no reason Porsche or Daimler or someone else can't do that.
Okay, so it's always nice to hear a little bit of the bearish case, just to get a little bit of an understanding of what people say. Let's go through some of the comments. Freelance Finance, shout out to you. Once again, these guys think they're only a car company. Also, guys, definitely check out Freelancer Finance's channel. I love these guys so much. They put a lot of their money in Tesla in 2018, made a lot of money off of that. It's silly to keep hearing this. Miyoko says that guy is a false argument. Toyota has $200 billion in debt. Tesla has 0 in debt. I don't know if you're correct on this, Abbas. I might be wrong on this, but I feel like I'd imagine you're correct. Toyota debt $200 billion, which means their market cap is 195. That means they have more debt than their market is worth. Oh yeah, look at this. Their debt is $293 billion. Yeah, that's not or a little bit lower than that, but $206 billion, September 3rd, September 30th, 2022. Tesla has no debt. If I'm not mistaken, Tesla has 0 debt. His argument is weak. How do these people get on CNBC? I'm serious. He literally knows nothing. Yeah, look, the goal, I don't even blame CNBC for that. They're just trying to create like a counter perspective. I'd rather hear the counter perspective than not hear the counter perspective. But the way they get on by CNBC is having a counter perspective. That helps. It's good TV at the end of the day. Tesla bears sound so dumb. That was more clownish than bearish. Yes, no debt. Yeah, that's what I thought, right? So Toyota has $200 billion in long-term debt, $195 billion market cap. Tesla's growing at 50% year over year, $21 billion in revenue, and the best margins in the business, and no debt in the automotive businesses, and buying back stock. Yeah, I was going to do a video on this. Apparently Tesla should be in the prime position right now to buy back stock. We have people like Gary Black that are prominent in the Tesla community really asking for a buyback of shares. There was a comparison between Apple in 2013. Man, I don't have the tweet. Wait, let me see if I can find. All right, let's see if Twitter search works. I want to show you guys this comparison. This was such a good tweet. Apple buyback. Let's see if it pops up. There we go. It popped up. Thank you. Twitter search is getting better. This is going to be an interesting one. Let's look at this. Because it'll apply to Tesla in a second. Is that in dollars or yen? The Toyota debt is in dollars. dollars. I'm looking at it right now. It's dollars. Should be dollars. Yeah. The website I'm looking at is dollars. I could be wrong on that, but it looks like it's dollars. It's on ycharts.com. It says dollars. Okay. Look at this. Let's take a look at this. All right. I'm probably going to do another video on this later because I want to go more in depth on this as well. In October 2013, Carl Icahn, who's an activist investor, wrote an infamous letter to Apple CEO Tim Cook requesting an immediate stock buyback since then. And since then, Apple has bought back hundreds of billions of dollars of stock. Yesterday, the third largest Tesla shareholder, Guan Leo, by the way, apparently Elon Musk unfollowed this guy because he was getting tired of him complaining, requested that Tesla's board of directors do the same. And when they mean third largest shareholder, they mean individual shareholder, not institutional. Okay. So Carl Icahn in 2013 said, Apple, you should buy back your stock. Apple was trading at $500 billion. They had revenue of $35 billion. They had net income of $6.9 billion. They had cash of $42.6 billion. Leo Koguan yesterday, or a couple of days ago, said, Tesla, you have a market cap of $550 billion. You have revenue of $21.5 billion. You have a net income of $3.3 billion. You have $21 billion in cash. Why don't you buy back your debt? Well, here's what happened, right? In the letter, Icahn wrote, it is our belief that a company's board has a responsibility to recognize opportunities to increase shareholder value, which includes allocating capital to execute large and well-timed buybacks. The return on the bought back Apple stock in 2013 is 700% since 2013. Now, this is actually the reason a lot of analysts feel like Apple always fudges their earnings because they buy back so much of their stock that they make it look like it. But nonetheless, right, they bought back a lot of stock. 2013, they bought a billion shares. 2014, 1.9 billion. 2015, 1.3 billion. 2016, 1.18 billion. And these were the prices per share, 17, 23, 27, 25. The average price today is 141. Obviously, a nice little 7-bagger. This was an 8x return in a decade, but the most important aspect of a stock buyback is reducing shares outstanding, which boosts the earnings per share. Because if you have 10 shares and I buy back 1 share, now we have 9 shares, which means the earnings I get per share are now not divided by 10, but divided by 9, which means mathematically it goes up, which obviously is good for Wall Street. Which is why it would be great for Palantir to buy back shares, but not at this stage, even though the price is low, because, with their money, they should be doing other stuff. Since Icahn's letter, Apple has reduced its shares outstanding by 40% with buybacks, which has aided Apple's EPS growth over the past decade. As you can see, their shares outstanding go down 40%. Their net EPS diluted for the full year goes up almost 330% from shares going down. And 2014 is when Carl Icahn wrote that letter. And then you have Gary Black saying the attaches our 10/13/22 letter to Tesla board re-share buyback. So now you have Gary Black basically saying to do the buyback. And Gary Black has made an argument. I'm not going to read the whole thing, but like one argument here, he says that at the October 13th price of $221 and assuming 2030 non-GAAP earnings of $42.30 PE, we calculated an annualized internal rate of return of 24%, well above Tesla's after-tax return on cash and new debt. Even our 2023 non-GAAP savings of $8, buying Tesla back shares offers a 3.6% earnings yield, which is higher than Tesla's after-tax return on cash in the first year. Which ultimately means, like, look, at the end of the day, the stock is cheap. If they have a price target of about $550, Gary Black's fund, in the next 5 years or in the next 3 years, which means if that's the case, Tesla's board of directors, they're arguing to consider a $10 billion share buyback. It's not the worst argument. Because Apple did it. And look, at the end of the day, investors will reward your stock if you are friendly to investors and you do something that is very shareholder friendly. If you buy back stock and you reduce the shares outstanding, investors like that. They really, really like that. So it's not a bad idea for Tesla to be able to do that. It's not a bad idea. Tesla needs to spend in their business. Just last year, Tesla sold stock. Not much has changed. Yeah, I mean, at the end of the day, one could argue also Tesla should be using that money to do business stuff, not buyback stuff. But with the company being the way it is, with the growth being the way it is, there might be an argument, a simple argument to just buy back the stock and make shareholders happy. Especially in this market where the macro has really hurt Tesla, buying back might not be the worst thing in the world. Let's hear a little bit about Twitter. So the Twitter files came out or two, and I'm going to go through them a little bit, go talk a little bit about what was happening. But let's hear some analysis. Basically, Elon Musk had released the second grouping of filings that showed that Twitter censored a lot of people who are left-leaning over the past couple of years in a variety of different ways.
Former New York Times columnist Barry Weiss releasing the second installment of the Twitter files. It includes images of what appears to be an internal Twitter system that marks certain accounts as being blacklisted in certain ways. For example, one was marked as a, quote, trends blacklist, another as a, quote, search blacklist. I want to bring in California Congressman who found himself at the center of the Twitter files saga just a week ago. Representative Ro Khanna joins us this morning. Congressman, it's nice to see you, sir. You did get a nice little cameo in this Twitter files saga, and raising the issue. Really, I think the only person, at least that we saw in Congress, especially on the Democratic side, suggesting that those Hunter Biden files, or at least the article, should not be blacklisted. What have you made of what you've now seen from inside this reporting?
Well, Andrew, I believe that Twitter is the modern public square. And it's one thing to say they shouldn't have released sensational pictures about Hunter Biden, which I agree with. But to censor the New York Post, to prevent sharing of articles, that's just wrong. And I stand by what I wrote. And I hope that they will not do that in the future. Even though they are not obligated to live up to the First Amendment, they shouldn't be censoring journalists or things that they disagree with.
Do these new series of what might be described as tweet reports, lead you to have more questions, less questions? Are you glad that they're going through all of this? I mean, there's some people who think that this is great. There are others who think that this is political or something else. Others who worry about the privacy, by the way, of Twitter employees or former employees and the like, and email addresses. By the way, your email address, I believe, was exposed in all of this. What do you think?
Yeah, I think the transparency is important and good. Look, I don't mind that it happened to me. It wasn't ideal. I could get further security of my account. I do think they need to be sensitive to non-public figures, to lower level employees, and making sure their personal information and emails aren't being leaked. But here's the bigger question, Aaron. Republicans are rightfully concerned about censorship. Democrats tend to be concerned about respect. You don't want people on these platforms who are spewing anti-Semitism, who are spewing racism. And this is a conversation we need to have as a country.
Right.
What is that balance? And so I think the more transparency, the files being released, I've even said I'm open to hearings in Congress, in a Republican Congress, as long as they're not about gotcha politics. What did President Biden do? What did Trump do? But more about the broader questions of free speech and censorship.
Aaron's a much better writer than I am. But want to turn to talking about hearings. Sam Bankman-Fried tweeted this morning that he's willing to testify.
Did I say Aaron? I apologize.
You don't need to.
Andrew,
by the way,
well.
I'll take being mistaken with Aaron any day of the week. But to this point about SBF and this hearing, what do you expect that we could possibly hear? And do you expect him to testify in person?
Andrew, I did listen to your interview, which was, I thought, very thoughtful. I think there are two different questions. One is just garden variety wrongdoing. And many of us thought that Sam Bankman-Fried was innovative. No one would have expected, or very few expected, that what could have been going on is he was taking people's money and spending it on without their consent. And that's just wrong, no matter what the industry is. The second issue that needs to be looked at is blockchain and having greater regulation. Right. Look, I have a lot of confidence in Gary Gensler and the CFTC. I think they need more authority. I think it's unfair to be blaming them. I think what we need to be doing in Congress is figuring out how they have more authority to actually regulate. And Gensler's been sounding the alarm about some of the excesses of blockchain for a long time.
Praising Elon Musk's leadership style.
Okay. So obviously the Twitter files were pretty insane, right? I meant to say right-leaning, not left-leaning people were basically censored. I mean, like, this shit was crazy. This shit was like a different level of just people that were put on lists that were not able to like, discovery of content on a social platform is the basis for that platform to be relevant and meaningful at the end of the day. And if a platform is stopping people from getting discovered because they don't agree with them like, it's one thing to say this person said a really, really bad thing. It's obviously hateful stuff. We shouldn't allow that to spread. It's another thing for them to be like, we don't like that they're right leaning, and therefore we don't want their messages to spread algorithmically through. Like, that's I think honestly, Elon freeing that up and stopping that and like making Twitter return to an actual place for free speech, that is one of those things that's good at the end of the day. Like, that's actually a good thing for him to be able to do. And that's something that's needed, because that's crazy, bro. Those Twitter files you guys have got to see. I might do a video on them and just kind of explain a little bit more about it, but it's tough. It's tough seeing that, because you're just like, wow, you'd never think a tech company is actually doing that, and then you go behind the scenes like they're actually doing that. Some of you guys saying Google and Facebook would be doing that. Look, at the end of the day, on YouTube, if you go to some conservative YouTubers, they get views. Like, they get a lot of traction. Like, Ben Shapiro and Daily Wire brings in millions of views a day on YouTube, or at least a week. And so I don't know if YouTube's as biased as something like a Twitter, just given YouTube's Google, and Google has search, and search is a little different. I'm not saying they're not biased. I'm just saying I don't know how biased they would be. Facebook also makes a lot of money off conservative content. You guys have to remember, Peter Thiel was on the board of Facebook, and he massively influenced Zuckerberg's viewpoint on free speech. I mean, Zuckerberg, when he talks about it, it almost sounds like an identical copy of Peter Thiel. At one point, Zuckerberg was saying we shouldn't ban people that have denied the Holocaust on the platform. And the reason he was saying that is not because, he's Jewish. It's not because he wants that content. It's because he really believes in free speech. He obviously clarified his thoughts. He said that's not good content, all that stuff. But I don't know how much they are censoring. It's not that they're not. It's just a question of to what extent. But Twitter, this stuff is like just pure obvious that it is doing it. Wrong amid free speech covers hate speech. So there are some nuances, right? Like, if you put a swastika symbol out and you say, I want to kill XYZ group of people, that's not going to be covered under any free speech definition, not even in the America, which is the most freest country in the world, right? So that's why Kanye got banned for putting out some of that. So that it's nuanced. I'm not saying it's objectively right or wrong, but there are some nuances where no one's going to want to use your platform if you're putting out swastika symbols every second talking about killing people. Like, that's some content that you probably don't want to spread it across the platform. So that is true. All right. Well, that is free speech. Simple. Free means no nuance. Look, that is true. Technically, free means no nuance. The problem is a social media platform that's a private company supported by advertising dollars cannot survive if there is not nuance. You know what I mean? Like, if it's a wherewithal, it becomes 4chan, and no one wants to be on those platforms at the tune of billions of users. So I think there is nuance to this stuff, and Elon Musk even believes there's nuance, and he's, one of the most free speech advocates that I know. But at the end of the day, it's different. Swastika is a symbol of peace. And yeah, I know I'm Indian, but it's a question of the context, right? If an Indian tweets out a swastika and because they're praying for Diwali, which is Indian holiday, that's a different context than if someone tweets it out and they're, obviously have different intentions. So it's all different nuance for it at the end of the day. All right, that's it for me, everybody. Thank you guys so much for being here. I appreciate it. A couple more videos coming out today about this new Palantir deal. We're going to talk a little bit about this Tesla stock buyback idea. I want to make another video about that going deeper. I might be talking about Roku as well. And then also we have Palantir Weekly and SoFi Weekly later tonight. SoFi Weekly at 10 p.m., Palantir Weekly at 11 p.m. So that'll be fun. Thank you all for joining. Last market open of the week. I wish Saturday and Sunday we had the market open so I could do the market open on Saturday and Sunday, but we don't. No, I don't wish for that. I probably wish that Saturday, Sunday, or it stays the way it is and we don't have to open the market there. Is there a stream with Tom? Yes, 2:30. We should be streaming. Hopefully nothing changes. Daily Cowbell was back yesterday. I don't think it'll change. I can't guarantee it won't change, but we should be streaming 2:30 at Daily Cowbell. All right. Thank you, everybody. I appreciate it. I will see you on Monday for the market stream, but a bunch more videos coming out today. So see you later. Bye-bye, everyone.